All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. There we go. Let's go out and take a look at a few things here this morning. Market it's down about what? About 12 points here on the S&P. Small caps down about 1/3%. Tech almost down 1% here this morning. And you can kind of see overnight futures and what they've done. They kind of traded in this 27.50 down to 27.20 range, so a 30-point range, and stayed within the last 2 hours of the market from yesterday, right? So we still are dealing with a market, and this isn't going to go away anytime soon, that has very little price stability within a 20-point range, where it's not a market you can look at and go, oh, it just moved up 10 points. That's, okay, everything's good. Or, oh, it just moved down 10 points. Oh, everything's bad. It's just not that kind of market. It's not going to be that kind of market. And, need to keep that in mind here as we go forward. But overall, if we look at the dynamics of this market this morning, remember, we saw a reversal in the market yesterday, but we didn't see a reversal in the market metrics. It wasn't like the market metrics all turned and said, all clear, go bulls. They actually got down to -10, got into that incredibly oversold area, and an area where we tend to see a bounce. But if you look at today's bounce in the market, where's it being led? Look at the big gainers. Consumer staples and utilities. This is where the money's going this morning. Real estate, a little bit of consumer discretionary thanks to Amazon. But overall, this is a safety rally. Absolutely a safety rally here. You can see tech, now. Tech has just been reversing all morning. You can see the XLK absolutely the worst here this morning. Communications getting hammered as AT&T drops on its earnings, but banks, no real news on them. But they can't really buy a bounce here right now. In the banking sector. But it's so far here this morning is very much a safety rally, at least for now. And I think that has to be respected. And I know the market reversed, and I know we've talked about, hey, you know what, this is a very interesting spot for the market to kind of bounce off of, and I expect the market to go 40 to 50 points higher from here. But it's not going to be straight up. It's not going to be simple. When you look past pullbacks and you look at the way that the moves up happen, there's plenty of gap downs, there's plenty of sells and then rallies, and I know when we look in hindsight at charts, we never feel those, right? So if we look back here, we never feel this gap down right here and this sell off, right? Gaps down, sells off, and then rallies back, right? Because we can see that it rallied on back. Oh, okay, it was just another up day, right? We never feel the fact that, hey, on this day, market gapped up and then sold all morning, and then rallied, and then sold off into the close, right? When we're going in real time and we're experiencing that, the natural tendency is to want to analyze every one of those moves, right? When we look in hindsight and we look at that, we don't analyze every one of those moves. We don't feel those. Those aren't the same. And so it's a lot easier to say, oh, yeah, of course, nice little bounce, right? And what I'm saying is right now in this market, there are going to be, quite a few of these, where it's up and then it's down and up and down, and they don't necessarily mean a heck of a whole lot. But when I look this morning, and when I look at the market open this morning, it's not telling me anything different than yesterday. And what did yesterday tell us? It told us the market vibe is at -10. It's severely oversold. Generally in a position where there's a nice bounce. But it did not create any kind of levels in terms of the market where we can expect some, really nice price stability. Now, JP Morgan came out this morning. They spoke about some levels. We saw Dennis Gartman from the Gartman letter, come out, speak to some levels. But my take, exact levels in a market like this, who cares? Who cares? They just don't matter. And, we see that over and over and over again. We see it back here. Here we go. Okay, here are the lows. All right, the exact level is going to be if these lows break, bears are going to be in charge. And those lows broke, and ooh, bears didn't take charge. We see it all the time. And so for me to go out and to call a specific level here, I don't think the market's built one. I don't think it's created one. I do think these lows are important in terms of this is where we had a good chance of seeing some sort of, kind of spectacular action. I don't think yesterday was overly spectacular, but still think we'll see there's still plenty of fireworks, to be had out there. And, this is anything but a market that's giving the all clear, go buy anything type of market. Now, yesterday, Michelle shared with me some of the emails that came into support and into my inbox, which I don't monitor very closely. But she shared a bunch of stuff here with me, and I want to kind of speak to a few of these things. Okay. First thing I want to speak to is patience. And Jake, thank you. Thank you for your comments on it. I bought some SPY puts, and I was patient as it rallied, and then we saw the SPY drop, and then it whipsaw rallied here on Monday, and I popped out. I wasn't patient here with it. And where's that line between patience and kind of reacting to what you see, right? And, for me, yes, I really wish I had held those SPY puts. That would have been nice. I don't mark my exit down as an error in my book and try to take a lesson from it, right? It's not that type of thing, because the reality is I got whipsawed, right? I got action in the stock or in the market where I got whipsawed, where we came off the lower band, rallied aggressively, and I didn't have a good stop point. I didn't have a good out point. When I don't have a good stop or out point that I'm comfortable with, that's when I lose some patience. I'm not as patient. I either have to be ultra patient and be willing to risk it all, like something like Ford, and I'm willing to do that when I put in a little bit. But when I have a larger position and I don't have a great stopping point, and I know that the only stopping point here is up here, and if I let it get to that point, my option at this point, if I let it get there, my option is going to lose a ton. Am I willing to take that risk? And so the bottom line is I wasn't willing to take that risk with that option given the price action that I saw. Hindsight, yeah, should have held it. Would have paid off, would have been nice, would have been, home run. But at the same time, right, I did the same thing with General Dynamics. I did the same thing with General Dynamics. It wasn't, it wasn't pushing my way. As much as I wanted. I knew if it started to pull back, I didn't have a good stop level, so I used the next little bit of move to hop on out and move on out and be gone with it. And, it's one of those where good thing I wasn't patient. Had I been patient, right, the option would have gone to zero very, very quickly. So it's one of those where I'm willing to be patient, and I will be patient as long as I have parameters that I'm comfortable with. But when you're trading options, when you're trading stock, some of your parameters, they don't shift all that often. But when you're trading options, parameters can shift because what happens? Well, 3 days later, your option is a lot different, especially if you're dealing with a 2-week option. What you get punished if you're wrong is significantly greater 3 days later after you enter. And that was the case in the SPY, right? My punishment for being wrong, if I were wrong on the trade, would have been severely different than 3 days prior. And that adds that risk factor without adding reward factor. And so for me, it was just, yeah, I wasn't willing to take that risk. And, I mentioned yesterday, no risk it, no biscuit, right? And, it's one of those where had I taken the risk, it would have paid off and, it would be nice. But at the same time, I'd have to question myself in taking that risk in that moment. And, yeah. So anyway, sometimes when it comes to options, it's, I know what happens afterwards, dictates whether you're right or wrong. But in terms of patience, in terms of, am I going to be patient with something? It has to do with the parameters. And if they're within my parameters, I'm more than willing to be patient and not going to be jumpy, with small moves, right? For instance, Adobe this morning, right? It opened up, it was down $1 or something, early, and then it went up $2, and then it dropped and went negative. And I'm not sitting here very jumpy or very impatient here with it. Why? Because I know my parameters. My parameters were set up, yesterday. The parameters are good. They're strong. And it's not something I'm trying to go, oh, well, you know what? Is it going to go down from here or is it going to go up from here? And trying to, come up with all that. I know right now the market's kind of in a little bit of, chaos. And, look, I have a good setup and I'll run with it. And I know where I have to say enough's enough. And Jeff, you're wrong, and move on. And I'm willing to take that risk. If it were a weekly option and it rallied $2 and, I was worried about pulling back $5 and taking my option to zero, my patience would be a lot different, right? It would be a lot different. When it comes to stock trades, right, my patience is a lot different. Yesterday I bought some lows, in the morning. Right? Yeah, it's happening to bounce here today. I'm kind of disappointed, because I want to add more. So don't rally too much. But overall, it's something where I'm willing to buy lows here, and I'm willing to be patient out to 6 months. Right? So it's not something where I have to really, take a look at the price action in any kind of major way. I'm willing to be patient for a long time. I've been building an IBM position here as IBM has been pulling on back. And, I bought my first 20% right here at 140. I bought my next 20% near the earnings lows, and I bought my next 10% yesterday. And so I'm 50% in, right? But it is something where I'm not looking at it and going, oh, today's action, does it mean something, and what do I do? No. I'm just waiting for another chance to get on in. I'm willing to be patient with this out years, not months, not through 2019, but out through 2022, 2024, right? And so my willingness to be patient is very, very high, where, if I have a IBM call option and it does today's action and it's a weekly, am I willing to be patient? No, nowhere to the same degree there. And so the option that I have, the risk reward on that option that I have, will oftentimes dictate my patience level there with it. And you see, if you go back and look at the challenge trades, even this challenge, there's some I've gotten out, been a little jumpy on, haven't been very patient with, and others I have. And the ones that I've been patient with, I've generally had more time on the option, and the ones I've been more jumpy with, I've had less time on the option. And that's kind of generally what you'll see from me over time. Okay, but I appreciate that, Jake, and very good topic of conversation there. Now, another thing is I bought some Adobe yesterday, and I said it as I got in, with my entry, that this isn't an all clear sign on the market and go buy anything and everything. Yeah, there's some interesting setups, and I showed some of those setups. But, it seems like my buy of Adobe kind of sparked oh my goodness, if I don't buy this market, if I don't buy into everything, then I'm going to miss out. And the reality is that it's just not the case, not even close to the case. And this morning I was chatting with one of you, and he brought up some really good points. I want to share a couple of those things. But when we're dealing with a market where the metrics are strongly negative, where the market vibe is strongly negative, and you look and you say, where do I want to get in? What do I want to do? I want to pick the bottom, right? I want to pick the bottom. I want to take advantage if there's a nice 40 to 50 point point rally here. Well, here's my question to you. Are stocks that are hitting new lows this morning, are they going to be your best bets for bounce backs? Bank of America. I mean, is this the one you want to go buy to play the market snapping back higher? I mean, it set a new low yesterday. It's close to those lows here today. You know, you could be right, and it could snap back. And if you're right and it does snap back, it does feel really good. But if the market doesn't snap back aggressively, what's Bank of America going to do? Yeah, it'll continue to bleed. And it may not make any sense. It may not have anything to do with the fundamentals. It may, put it fundamentally dirt cheap. But the reality is there's sellers still here. And the sellers keep selling. And you're not going to be able to tell them, hey, it doesn't make sense to sell. Stop selling. They may be selling for a reason that has nothing to do with anything of Bank of America. The reality is the sellers are still there. When we're dealing with stocks that are setting new lows, buying them when the market vibe is bearish or the market internals are bearish, that's a lot tougher. If you want to play a snapback, if you want to play a, hey, you know what, I want to play for this market to kind of snap back, generally you're going to get better return, better risk reward, and better option values playing strength rather than weakness. What do I mean? Well, take a look at some of the stocks I talked about yesterday. Walmart. Strength or weakness? Right? Does this have strength or weakness going on with it? Those that are stepping into the market, they look at a Bank of America chart, they go, ooh, yeah, it may be cheap, but wow, Walmart, ooh, something good's going on here. Okay. They're much more willing to step in. Yesterday, where did I step into? I stepped into Adobe, right? Adobe may or may not work out, but overall, while the market set a new low, Adobe set a higher low. Yeah, it pulled back with the market, but it has shown some relative strength greater than the overall market. You can go out and you can go and pick up a lows, right? And a lows may bounce for you, and it's bouncing today. But what did it take? It took analyst commentary for it, right? It took analyst commentary for that to happen. But if you're going out with options and saying, what do I buy when the market is dipped and the market's near its lows, and I just think maybe the market rallies off this point, your options are going to be a lot more expensive if you're buying the Caterpillars of the world, if you're going and trying to buy the General Dynamics of the world, if you're going to try to buy the stocks that are setting new lows in this environment. And you know what? They may be big to bounce. But what's CAT going to need? What's it going to need? I mean, is this thing just going to all of a sudden bounce back up to 140? No. No, I mean, go look at prior history when it comes to CAT and pullbacks like this. I mean, what happens? Let's just come to a weekly chart. It'll give us a little more perspective. But this is the biggest drop in Caterpillar in how long? We haven't seen a drop like this in CAT since 2015. What happened with CAT back then? How long did it take before it really moved? Yeah, I know it rallied $10 right here. It rallied off its lows $10 there. But till it really said, hey, you know what? Let's go. Took many, many months. Many, many months. And so to try to go out and say, well, I'm going to go bottom pick Caterpillar right here, your odds just aren't in your favor. They're just not in your favor. Now, if the market vibe turns bullish, right? If the market environment turns bullish and you start to see some life come into Caterpillar, yeah. Why? Because when the market internals are bullish, investors are much more willing to buy value. They're much more willing to overlook a flaw or two. When the market vibe is bearish, they're not willing to overlook a flaw. In fact, you can have, you can be the prettiest girl at the ball, and you know what? If you have one hair out of place, they're going to sell you. They're going to push you to the side, right? Where in a bullish market, your hair may be all messed up and all, frazzled and everywhere. They're going to overlook that and go, hey, I want the prettiest girl at the ball. And that's kind of how, how you have to kind of look at some of these that, have pulled back substantially and aggressively in this market environment, and who have had pullbacks that are greater than what they've had at any period of time in the last year, like Caterpillar. Has Adobe had a pullback greater than it's had at any time in a long time? No. This is kind of a normalized pullback. I mean, Adobe's had plenty that are bigger, right? This isn't something with that extreme, right? We look at something like a Boeing, who came out with earnings here this morning, right? And, has the pullback in Boeing been anything, really abnormal or, anything really aggressive compared to everything else? Not at all, right? And so buying strength when the market vibe is weak is kind of is one of the best ways to bottom pick. Buying weakness when the market vibe starts to turn and the market vibe turns bullish, that tends to be the better time, right? So I like JP Morgan. I like Bank of America. I think they go higher. I want to trade them for the challenge, and I don't want to miss them. So I need one of two things. I need the market vibe to turn bullish and for them to give me a good risk-reward scenario, or I need a higher low to come into play, right? And if you keep that in mind, the fact that, hey, I'm waiting for a higher low, and you kind of let yourself go and say, you know what, if I miss the bottom, who cares? Because the chances of me picking the bottom are very, very slim. The chances of me getting in and it going lower are much higher. So I'll wait for a higher low. I'll wait for that rally and then that pullback. And magically my options will be cheaper. My risk reward will be better. And hey, I may even have a market that the internals are going my way. So, looking at a 1 day type of period and saying, oh man, I've got to get all in on the bottom day, otherwise I'm going to miss out. The market doesn't work that way. The market doesn't, the mechanics don't function that way. It does for short periods of time, like November of 2008, where it's just everybody in the pool, everybody out of the pool, and who cares what stock you have? It's going up if the market goes up, and it's going down if the market goes down. But there's a lot more differentiation in the market today than back then. Even though differentiation has fallen off a little bit, there's still much more differentiation than there was at that time period. And so it's one of those where I know how difficult that is, but you have to put that fear of missing aside. The fear of missing just is irrational. It's a fear that drives traders and investors to do irrational things. And it's one of those things where, look, there's always going to be something. It's not like they're going to close the market tomorrow and never reopen it again, right? And so you wait for what you're comfortable with. Because when you wait for what you're comfortable with, the gains you're going to make from what you're comfortable with, they're going to be much greater than the gains you're going to make just going and buying things willy-nilly and, just wanting to be in for the sake of being in. You've heard me talk about wanting to wait for some Katie signals. And, yes, I especially for the challenge, I want to wait for some Katie signals, and I want to be able to trade those, because generally when we have a pullback like this, once we start to see those Katie signals emerge, they tend to be really strong. They tend to be really good. And you know what? I've been waiting for it for a couple weeks, and it hasn't materialized. Does that mean I'm going to go and say, well, you know what? Forget that. Let me go do this, this, and this? No, right? Even when I go pick up Adobe yesterday, right? And, it's not a Katie signal, at least not yet. Even when I go pick up Adobe, I'm making sure I have a good risk-reward scenario here, and I'm not in a position where I'm going to take such a loss that, I'm going to miss out. It's also something where, I have the potential of a Katie signal here today. The 3.7 is crossing up today, and it's one of those things that yesterday I go, okay, yes, we have the setup and it's all nice, but this is something where if it rallies from this point, we could see a nice Katy signal come in, and you know what? Right now, probably if the market closed, it would probably be a Katy signal. I'm not sure 100%, but now, okay, yeah, I got in a little early, but I'm in a Katy signal, right? I'd kind of like to be a buyer of Micron. Right, to me, it's it's starting to get into the ridiculous territory, right? But I don't have a Katy signal. I thought I might get one right back here. It didn't materialize, and okay, you know what? I'll wait for that Katy signal, and so I'm willing to go out and buy if it's close. But no cigars. Just wanting to bottom pick in this market. Get your finger sliced off very, very, very quickly. Okay. Higher lows. I can't stress that enough. If you want to be an aggressive buyer, higher lows. Wait for those higher lows. They'll happen. They'll happen. When the market finds that, it's ready to bounce and, okay, comes and retests something or, closes weak today and bounces up tomorrow, different stocks, they're going to show signs of those higher lows coming into play. And, it's going to happen. If you're just totally concerned and worried about missing out on a market rally, well, then go play the market. Quit trying to play individual stocks, that are moving around. Go play the market, right? Come into the market itself, come into the SPY, and come in and buy some call options or buy a call spread or something of that nature, right? And you'll say, well, the call spreads are expensive. And you're dead on. They are. They are freaking expensive. They're just, for me, they're not worth it, if I give it any kind of time, to them. But, if you don't put much time, on them, they're okay, but best you're going to get is 2-to-1, and you're still quite a bit out of the money there with them. So you say, well, okay, I don't want to miss the rally. I'll just go buy some SPY. But get some exposure to the market rather than trying to bottom pick with some of the stocks that are just, frankly, we can go and we can argue the merits of General Dynamics, and we could show how on a fundamental basis this is a very cheap spot for this stock. We make that argument. Does it matter right now? No. Doesn't matter right now. I mean, analysts all morning have been going and apologizing for Cat's earnings, saying it's an overreaction, it's overdone, it's overcooked, and all of that, right? Does it mean, hey, okay, let's just go buy Cat? No. Micron had that all through here. All the analysts no, this is ridiculous, this sell-off. No, it's already priced in. The downturn in semiconductors is already priced in. Oh, no, this is a DRAM issue, not a NAND flash issue, right? Analysts for months have been coming out and apologizing for the pullbacks and basically saying, no, these are irrational. These aren't warranted. You think the sellers care? No. And so, trading with charts isn't about what the analysts think. It's not about what the news is. It's not about what the fundamentals is. It's about when the buyers are stepping in and when the sellers are stepping in. And so if you're going to go make a good fundamental argument, right, and you're going to use your chart, you got to wait for your chart to look nice, right? I would go out and I buy some IBM, right? I go buy some IBM. But it's not a chart decision. In fact, my decision had zero to do with the chart. It's not a chart-based investment. It's totally fundamental-based. And so my chart, to me, doesn't matter. Where I go play Adobe, it has nothing to do with the fundamentals. This is a chart-based thing, right? I don't care about the fundamentals. I care about the chart and the buyers, and I'm shorter term in my horizon there and in my perspective there on it. Okay, so I hope you're able to take something from that as far as how you're looking at it. If you're looking at it fundamentally and you want to be a buyer fundamentally, that's fine. But you've got to have a long-term time horizon. You've got to have a lot of patience when you're buying in this. If you're waiting for a chart, well, buy the quality, not the trash. And there's a lot of trash out there. And, you look at Micron and you go, well, Micron yesterday was oversold and it started to bounce. Why not buy it? Well, because it's down another 3.5% today, right? When things start to get routed, they can just get routed to a great degree. And, does it go to 36? Does it go to 35? Does it go to 34? I mean, what if you wake up tomorrow and it's at 35? Do you sell it? What do you do? Right? And we come in and we can start adding technicals to it and start talking about oversold a little bit. But even then, our hourly chart has never had a CCI below minus 300 here. So it hasn't become even oversold enough on a short-term basis, to want to step in and, and buy here just yet. If the market has one of those days where it just kind of runs away, where it just kind of says, hey, hey, everybody, you're idiots. We're going up 40 points, 50 points. For it to have that type of day right back here didn't need a catalyst. For it to have it off of these lows when it's nowhere near as oversold as it was back here, it needs a catalyst. It needs something. It needs some positive. And yeah, it has Boeing this morning, but that's about it. Outside of that, what does it have? Right? It has nothing. In fact, if we come here to Econo Day, you could argue the bears actually have more today than the bulls. And in fact, one piece of economic data that was released here, brings up some concern. Does it change things game-changing? I don't think so. But you look at the PMI composite flash number for October here in Europe, missed consensus, missed priors, came down to 52. Yeah. One of the lowest numbers. In fact, here's the chart. One of the lowest numbers in a long time. And you know why it fell? New orders. Right? New orders is why it fell. That's not what you want to see. If you're going to be pounding the table, this market goes to new highs. Right? That's not what you want to see. Now, if we come here to the U.S., the prior composite was 53.4. The consensus was 54.1, and it came in at 54.8. I mean, it smashed the numbers. Manufacturing beat it. Services beat it. So there were some real positives in this number. And so, yes, okay, Europe was a little weaker and everything else. But, yeah, the U.S. was very strong. Employment rose, and new orders have continued to be very strong. So, it's one where if I saw the U.S. and Europe both very, very weak, I'd be very, very concerned. But, I don't, so I'm not nearly as concerned there. But it is something that it is something that comes to play. Today we'll have the beige book a little bit later. Beige book is basically the Fed. The Fed releasing the economic conditions that they're seeing. And generally, they'll release this about 2 weeks before their next FOMC meeting. So about every 2 weeks, we get something from the Fed. We either have the Fed, speaking and having a rate decision. Then 2 weeks later, we get the minutes of that meeting. And then 2 weeks later, we get the beige book. And then 2 weeks later, we get the Fed again. So, this kind of 2 week cycle continuing. The beige book is, it's an important piece of data, but, generally the market doesn't react too much here to it. But on a day like today, who knows? And then tomorrow, we have the ECB, European Central Bank. They will be, they have a policy decision. There's not a lot of expectations from them, but we'll be interesting to hear what they say about some of the economic data that we've seen out of the Eurozone here of late, and what we see from Italy and that situation. So we'll continue to be fluid overall. But hope my comments help in terms of patience, in terms of buying opportunities, in this market, and how they transform. Now, if you're wondering what about the market vibe today, is it changing here? Is it changing at all? The answer is no. It isn't. It's still weak. It's still at minus 10, and it hasn't bounced. Right? I mean, it's not bouncing, and I know the market rallied back yesterday, but we didn't see the internals rally back. We rallied back enough for me to say, I'm willing to go buy something that has a good chart, but it's not to the point where I'm willing to go buy the overall market and expect that I'm going to make money in the next day or two overall. Could, but won't be my expectation based on the market internals, which continue to be strongly bearish, almost too bearish. So, anyway, thanks for hopping on. Have yourselves a great one. Any questions, please let me know, and we'll talk to you later. Take care.